is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to DeFi Decoded. This is our first episode of 2025. We are officially in the future. And since we're in the future, we expect big things to happen in the world of crypto and the broader world of technology and Web3. In that spirit, we're going to be making a few predictions today about what we think the world can expect over the next 12 months, what is going to happen in the on-chain world and in the broader adoption of crypto assets and related technologies. So let's get it started. Number one, stablecoins. Stablecoins, I know, is a topic that people have heard us talk a lot about. These are tokens backed by by currencies, almost typically the US dollar. US dollar stablecoins account for more than 99% of the total value. I think that stablecoin values, which are already at an all-time high and continue to surge, especially following the election last fall, are going to grow from about $225 billion today to over $500 billion by the end of the year. That would put it on pace to surpass, the Visa network in terms of size and really become a payment rail that starts to become systemically important. There are today tens of millions of people that already use stablecoins. They are widely used in the crypto world as a trading pair and a sort of store of value when you're, engaging in trading activity. But increasingly, they're being used for more traditional banking services as a way to store value, as a way to make payments, as a way to transfer funds between people on opposite sides of a border where payment rails may be underdeveloped. That would be the remittance use case. And everyone I talk to, who has interacting with people in the developing world or people who I've spoken to in the developing world has told me about how stablecoins are becoming kind of the de facto way in which a lot of business gets done. I was just in Brazil a couple of months ago, and the central bank has put out a report saying with some kind of alarm, frankly, that stablecoin transactions are growing at an incredibly fast pace. And my boots on the ground experience down there kind of corroborated that. The average Brazilian knows a heck of a lot more about USDT than the average Canadian or American. It's always important to remember to have an international focus. So stablecoins to $500 billion, driven largely by non-crypto trading use cases, that being driven largely by what I would call sort of middle and emerging economy markets. Number one. Okay, Andrew, number two.
Yeah, I really like that one. I saw some stat on Twitter today that annual downloads of popular remittance apps like Western Union had actually fallen like 25% year over year. Yeah, which is crazy because I think I saw remittance volume, if anything, is continuing to go up, and so clearly people are shifting to far cheaper alternatives with stablecoins sort of leading the way. So I can see like broad-based adoption. Stablecoins is like the one thing too that when you talk to people who are outside of crypto, they inherently understand sort of the benefit of stablecoins, and they sort of get it just because. And everyone sent a wire, and everyone knows how painful sending wires are. So, cool. Okay, so I like that. I'm going to shift. My first prediction is shifting a little bit more to the DeFi world. I think DEX Perps. So these are decentralized perpetual derivative exchanges. So, being able to trade crypto with leverage, sometimes up to 100x leverage. Those are going to go from roughly 1% of total perp volume right now. So decentralized perps are about $7 billion a day of trading volume, and the total perps market is about 700 billion. So right now it's about 1%. I think that it's going to 5x in relative market share. So I think the decentralized perpetual exchange will be doing 5% of the global total. I think the whole total will go up quite a bit. So I don't want to give like an exact dollar value just because I think just like in a bull market, you see way more leverage. So total volume is going to go up, but perps are going to go up 5x. Hyperliquid, which is currently, I believe, 21st in the world by daily trading volume. Hyperliquid is the #1 decentralized perps trading product. I think by the end of the year, it'll be in the top 10 as well. So those are my 2 predictions.
So right now, just say the stat one more time. So you think it's going to go from what percent to what percent again?
So it's going to go from 1% to about 5% of the total. And I think Hyperliquid will lead the way and go from just outside the top 20 to in the top 10.
Okay, I like that. That's actually related to the next one for me, which is about spot trading and the share of decentralized exchange volume. So over the last couple of years, we've seen decentralized exchanges like Uniswap, SushiSwap, and others becoming a larger share of the overall trading pie, but it's been pretty small. Last year, we hit an important milestone of 10%. As of January of this year, so as we're recording this, it just hit 20%. My prediction is by the end of this year, 1/3 of all spot crypto volumes are going to be happening on decentralized exchanges. Why is that important? Well, for one, it reduces a lot of the risk of counterparty risk and centralization risk that kind of helped to bring down the cycle the last time around when people were parking assets on custodial exchanges that were engaging in bad behavior. So I think actually for the health of the ecosystem, that's a positive. It demonstrates that these exchanges, in terms of their functionality, their UX, UI experience, are clearly getting better, though I do think that there's lots of room for improvement. And I would say that maybe people who are using crypto assets are getting more comfortable with, self-custody and interacting with these types of applications through wallets where they're custodying the keys. So I think all of that is very positive generally for the ecosystem. And I think that that's something that we should all be keeping an eye out for going into the end of this year. Now, it is possible, to your point, like if you end up in a cycle where volumes go through the roof and like Coinbase is doing 10x the volume, maybe those numbers get diluted, but I do believe that we're going to see them kind of grow proportionally. And I do think that the decentralized exchanges are going to outperform in that environment. So that's my number 3.
Yeah, no, I think that's a pretty fair, especially in a bull market, just because. So DEXs have a huge advantage in a bull market, which is they inherently serve the long tail of crypto assets much better than a centralized exchange. Because with a decentralized exchange, if you're just creating a random meme coin, you can list it on the decentralized exchange immediately. Whereas, Coinbase has a whole listing process. They actually, there's a whole compliance process. It takes them, a couple of weeks typically at the minimum to list a new asset. So in a bull market, you see, a proliferation of long tail assets because everyone kind of goes out on the risk curve. So I think 100% there's a structural reason for a continued shift to DEXs. And then I also really like the market cycle aspect as well. So yeah, I think that's a pretty good prediction. It's kind of crazy if you think about it. I mean, it's DEX volume was like 5% a year and a half ago. Now it's 20, and you're saying it's going to go to like 33%. I think when we started this podcast, it was I'm almost more conservative than the trend. Like the trend has been that it has doubled in the last couple of years. I think it went 5, 10, 10, 20. So I'm saying it's going to slow down, which is typical. Like if it doubles every year for the next 3 years, it'll exceed 100%. So it has to slow at some point. But, I think that the trend is our friend on that for sure. Yeah. So that actually fits somewhat nicely as well into mine. My next prediction is that I think layer 2s are going to hit a new all-time high in revenue. The reason why that is, I guess, somewhat contrarian was almost exactly a year ago, I think about 11 months ago, layer 2s hit peaked in terms of total revenue. So gas fee sequencer revenue. The sum total was about 3.5 million in one day. And that was driven by the fact that the sort of like Ethereum blobs upgrade hadn't happened. So L2s were charging far more for gas. And then also on top of that, we had like a bull market, obviously in Q1 of last year. So since the sort of blobs upgrade has gone in, revenue for L2s has collapsed, but as has the sort of cost to using them. We've talked a lot about that. And that's one of the big things that's kind of like crushed Ethereum, like ETH in the last 10 months, is just, effectively a collapse in revenue from L2s. However, over the last couple of months, we've seen a comeback. So L2s went effectively from $3.5 million a day in revenue to less than roughly 200K, 150K in daily revenue in August. So 95% plus decrease. And over the last couple of months, it's sort of rebounded to just under $1 million. I think it's going to blow through that and blow through the previous all-time high of 3.4. So I see like a minimum sort of 4x to 5x increase in sort of a daily revenue high. Partly that's just, in a bull market, we see way more on-chain activity. And I still think there's going to be sort of a shift, like a relative shift from Solana on-chain meme coin trading to more stuff on L2s like Base. And so finally, the reason why I say this relates is if you're someone who owns Coinbase, you would be very worried about your last prediction of DEXs taking up more and more centralized exchange volume.
Yeah.
However, Coinbase owns Base, which is the biggest L2 in the world and also by far the fastest growing. So again, it just kind of shows you the Coinbase management team is just so far ahead. They're sort of disrupting themselves, if anything. And so I think Base is going to be the big winner. And to be honest with you, again, in a bull market, even if DEXs go from 20 to 33% of total volume, it's likely that total volume is just going to go up so much that the centralized exchanges will all be posting record highs as well. So yeah, that's my prediction.
I love it. Yeah, the Coinbase story is such an interesting one. Coinbase launched USDC. Do you want to take a guess at what year that was?
I think they launched it with Circle in 2018.
That's right. Yeah, 2018. Yes. So that's 7 years ago. And I remember at the time, it's like, what is this? What's a stable coin? I think USDT was probably around by then, but it was, to me, just an example of, they definitely sort of like do the ground game early and, I don't know, plant the seeds. Maybe I'm mixing metaphors, and sometimes it takes time to play out. But like they couldn't have launched a ETH layer 2 network like Base and had the success they had if they hadn't sort of been planning ahead. And I do think that, disrupt yourself is the only way to go with this industry and all industries, frankly. You don't want to be a 10-year-old company, in the case of Coinbase, 12 years old, and all of a sudden fall victim to the innovator's dilemma where, an incumbent technology, a new technology comes along that maybe is inferior at the outset, but offers several advantages, like to your point, can allow people to upload their own assets and allows anyone anywhere to trade without doing KYC. And then that eventually eats your whole market, right? And you can't play catch up because you haven't planned for it. So I do think that they're a good example of a company that hasn't anticipated that really well. On the question of like L2 revenues, a lot of that flows to Ethereum, does it not? Or like indirectly, like how does remind us again of the economic sort of like flow chart for ETH and ETH layer 2s?
Yeah, totally. So right now, L2s are paying about 200 grand a day of essentially like flow through revenue to Ethereum. Yeah. So yeah, you can kind of think of it as like a percent, I guess, of their total revenue. So I guess in this case, it's about roughly 30-40%. I'm not totally you can't really scale that exactly that rate, but you can kind of think of it in those contexts, in the sense that like there's like a take rate of their revenue that goes to Ethereum. So yeah, I mean, the more that L2s benefit, the more scope there's more revenue passed back to Ethereum. And again, I think, I think L2s are the best possible customers of block space you can have in the world, right? Like if you think of like a blockchain sells block space to someone who pays for it.
Yeah.
Solana, like Sui, say, all these different sort of L1s are selling block space directly to retail, who are buying the block space because they want to trade meme coins on some DEX. That's a very fickle customer because, as we know, the hot bowl of money in crypto is constantly moving from one game to the next. Last cycle, it was DeFi and NFTs. This cycle, it's meme coins. And to a certain extent, increasing extent, decentralized AI stuff. So that, to me, is a far less sticky customer than a layer 2, which is its own business. It's like a more enterprise customer effectively. So
yeah, that's a great way of thinking about it, right?
So Ethereum has kind of like made the shift to being like B2B. a B2B.
Yeah. That's a great way of, I'm sure you're not the first person to say that, but I have never heard anyone refer to Ethereum as a B2B platform before. So I like that a lot. So it's like ETH has completed its shift to a B2B platform. That's actually related to my next prediction, which is ETH is going to have a big comeback. Now, we're not really big on price predictions around here because it's so hard to put a pin in, where things are headed in a bull market cycle. But it's worth pointing out, and I put this in our, annual summary note for 9 Point, that the ETH ratio today is 0.03. So you basically take the ETH price divided by the Bitcoin price. And that is almost near the all-time lows. The all-time lows are around 0.02. The all-time high, I think it's 0.15, though it should be noted that that was during the ICO craze of 2017. The longer you go back in crypto, the funnier the numbers and ratios get. So if you just look at like the last cycle high, it was closer to 0.08, right? So in other words, with a constant Bitcoin price of, call it $100,000, which isn't far from where we are today, the downside on the ratio, if you assume it will remain within its historical bound, is, call it $2,000 to $2,500, and the upper target, assuming it gets back to the cycle high from the last cycle, is closer to like $9,000 or $10,000. So that's something that I think is like something that we should be keeping an eye on. But ultimately, like, ratios don't drive price, right? There's fundamentals underneath it that have to support at some point the value of assets. In the short term, markets are a voting machine, and in the long term, a weighing machine. Benjamin Graham, which I always love using value quotes when describing crypto because they're so at odds with each other sometimes. But ultimately, like, if you look at the numbers you were referring to, like, there's a reason why ETH has struggled. Not just the memes and not just the fact that Bitcoin ETFs are attracting more capital, though I think that's certainly two of the big reasons. It's also that we've seen the revenue, the platform trying to find its footing in this new regime where, revenues from L2s had gone down during that period of time. So basically, this is a related point to the one that you made, which is that if L2 revenues hit all-time highs this cycle, and if some of that flows to ETH holders, then it stands to reason that Ethereum as a platform should increase in value, because effectively its business customers are paying it more for access to its service, not unlike AWS or Salesforce or some other software as a service business. So in a way, I think that that augurs very well for ETH this cycle. Now, there's also the law of large numbers issue, of course, which is when something gets to $1 billion in size, it's harder to go from 1 billion to 2 billion than it is from 500 million to 1 billion. And that's especially true when it's $500 billion. So, like, will ETH go up 10x in value in the next cycle? Well, that would imply a market cap of 5 trillion, which is 1.5 times as big as Nvidia is today, right? So, I don't know, maybe, but it's unlikely. But I still think it can do very well. So we're looking for the ETH comeback. I think that this ratio has hit its low for this cycle, and that the value of ETH relative to Bitcoin is going to increase very significantly during 2025.
Nice. I would love for the underperformance to make a comeback. That would be great.
Yeah, me too.
Okay, cool. yeah, my final prediction is a little bit more off the beaten path because I don't talk about this category often, but my prediction is that real world assets, wow, can't even say RWAs, specifically gold-based RWAs, are going to 2.5x in market cap in the next year. So right now, Tether and Paxos both have essentially gold-backed coins, easiest way to describe it. And they're combined about 1.15, 1.2 billion in market cap. And they just essentially track the price of gold. I think those sort of, I guess I should say, irrespective of the change in gold price. Obviously, if gold price just goes up 2.5x, then it'll get there on its own. But irrespective of gold price, I think the market caps are going to 2.5x at least in the next 12 months. I think RWAs, I mean, we had a great pod on RWAs recently. I still don't buy that they're fully ready for prime time.
Yeah.
I think like the long tail stuff, still needs a couple of years. However, it seems to me like stablecoins have hit their moment, clearly going to scale. I mean, you think they're going to scale to half a trillion. I think that's optimistic, but it may end up even being sort of cautious in hindsight. And I think in that sense, I think gold RWAs are probably the next logical target to really take off.
Yeah.
And so this is pretty, I guess in some ways it's very optimistic, calling for effectively a 2.5, 3x in 12 months, but it could be one of those situations where it ends up being like a crazy 10x or something like that. They could be like $10 billion by the end of the year. So we'll see. But I think I know you talked to the Matador guys as well a couple of weeks ago. They're doing some gold RWA stuff on Bitcoin. I think my prediction is limited to just Tether and Paxos, just because those are the two leading ones at the moment. But yeah, I think like in the RWA space, stablecoins are going to go up a lot, gold's going to go up a lot, and we'll probably see some stuff with like tokenized treasuries as well. But yeah, we'll see.
Yeah. No, I'm with you. I mean, I think it's hard to say that gold has kind of missed out on the rally, given the fact that it's almost near all-time highs. But you can't help but think that some of the people who got attracted to Bitcoin are the kinds of people who would have otherwise maybe looked at gold as an investment. These are people who are looking for store value assets, uncorrelated assets, assets that are kind of independent from big companies or governments, that they can custody themselves if they want. And there's just frankly so many similarities from gold and Bitcoin. The problem is, for a lot of people at least, the way in which we invest in gold hasn't evolved that much since the days of the horse and buggy. Yeah, you can own an ETF, but you can't custody those certificates yourself. You can't use them to pay for goods and services. You cannot hold them in your own wallet. And that's very different, obviously, from physical gold and tokenized gold as well. Tokenized gold, I think, offers several benefits, and offers benefits too for people who just can't access a brokerage account to buy, an ETF product, right? So I do think that the RWA thesis is one of those things whose time has come. I mean, we know, like, I believe that stablecoins are an RWA asset. Like, this is the real world asset is US dollars. Whether you think the US dollar itself is an imaginary construct is another matter. Like, these are real assets in the world, and they are now part of this massive ecosystem. So I think you're absolutely right. I think gold is probably one of the next ones to really take off. I mean, there have been treasury offerings, bond offerings, real estate offerings, art offerings, like you name it. There's been a lot of RWA projects, and they've shown that this stuff works, but they've never really like hit an inflection point where they're like growing like crazy. And I think that with gold, you may find that the opportunity meets the moment, and that you could see that huge growth. So I completely agree with you.
Sorry, one last thing also just to add. I think like the problem with the other RWA segments is they're like esoteric and like relatively specific assets, right? So putting a corporate debt on chain, it's kind of in a way it's a very niche asset, obviously, whereas gold is fungible among itself. So I think another thing too with gold is As more money comes on chain, there's going to be a lot of people who are already gold bugs buying Bitcoin, who then may be like, this is an easier way to, or at least this is an interesting way to access gold as well, given that I'm already buying Bitcoin. And then I actually think there's a little bit of a second thing, which is a lot of, like, for example, myself, I would never consider myself a gold bug. I don't even consider myself a gold bug now. But as you get kind of crypto pilled, the sort of arguments for gold start to make a little bit more sense as well. So there's almost like a reverse. A lot of Bitcoin is just kind of like, it's always about Bitcoin turning gold bugs into Bitcoin maxis. But there is also a little bit of reverse where people get excited about Bitcoin and then they actually effectively learn more about gold and realize it's kind of the same, or at least a relatively similar sort of asset in some ways.
Yeah.
So.
Yeah, absolutely. Okay, the last one is taking a little bit of a departure, but last year we saw the approval of Bitcoin ETFs, then we saw the approval of the ETFs. What we didn't see was any corporate issuers going public in the US in the crypto space. So that's different from what happened in Canada. In Canada, we did have a couple go public. I think that this change of government in the United States and the appointment of more crypto-friendly people to senior cabinet positions like Scott Bessent, Treasury, Paul Atkins, SEC, David Sachs, crypto and AI czar, all of that is going to lead to a huge change in tone at the top that I think is going to open the doors for more corporate issuers to go public in the United States, and also for there to be more ETF products that own crypto assets. I don't, however, think that this is something that's going to happen right away. And I think that is something that people need to be aware of. This is a second half of 2025 prediction, and I think that is optimistic. And the reason is simply a timing one. You got to have Trump take office, then you got to get a bunch of these people approved by the Senate during the appointment process, then the confirmation process. Then they've got to sequence their priorities, and crypto is a priority, but it may not be the number one priority, right? And so you've got to wait for that to sort of be on the docket. Then and only then, I think, will you start to see these things happen. So it's not a matter of if, it's a matter of when. I think back half of 2025, we know of many companies, Circle, Kraken, and others who have been in the queue, BitGo maybe, and looking to tap the markets as a way to go public. I think we're going to start to see not those names necessarily, but some big quality, big companies go public in the United States. And I think you'll start to see more and more ETFs that have exposure to other crypto assets other than Bitcoin and ETH.
Love it. Sounds good.
Got any others? Oh, I had one more just for kicks. So, the big story in the last couple of months has been AI, about AI agents. And, the logic is very compelling, right? It's crypto is a digitally native way to, move and store value and do transactions. And if AI, bots are going to be out there in the world, trading on your behalf, doing professional services like another useful work, they're going to need a way to pay themselves and to sort of build value on their little balance sheets. And the only way to do that is with crypto. So crypto is the killer app for AI, and AI is the killer app for crypto. I love the thesis. I think it's obviously massively overhyped right now because that's what happens in crypto. But in the spirit of hype, I'm going to make one final prediction, which is that last year, Sam Altman, the founder of OpenAI, said that AI will enable the first one-person unicorn, meaning the first, because of all the ability of AI to help scale a business, you're going to have a single person build $1 billion enterprise. I'm going to go one step further and say in 2025, we are going to have the first no-person unicorn. We are going to have an AI agent that generates its own token. That token might be a meme coin, might be a governance token. I don't know what it's going to be. But that the aggregate value of all the tokens as a result of the efforts of the AI is going to reach $1 billion in size. And I think when that happens, it's going to be a holy SHIT moment for a lot of people. We've already, frankly, gotten halfway there. Like, as you well know, and I think we've talked about, there's this thing, Token Terminal, that got behind an existing crypto asset called Goatius and drove it to $1 billion in value. But it wasn't the originator of this thing. It was something that was kind of had the guiding hand of human intervention. I'm talking about something that's entirely autonomous, unicorn created by an AI. That's going to happen this year.
I'm on mute. Yeah, I love it. I think the AI agent world is too. I feel like a boomer when I do research into that, so I'm not even going to pretend to know what's going on. But we'll see. I mean, there's a lot of hype on it right now, and it seems like there's a lot of momentum as well. So,
well, the good news is that 9 Point Digital Asset Group associate Jake Mooney and producer of the DeFi Decoded pod is deep in this world. And so he's been in the background for many months on the show. We're going to bring him on to talk about this. This is called, we're the Boomer Crypto Show now. So we're going to have something called Zoomer Corner or something. And we're going to do a little quick Zoomer Corner to figure out what the kids are doing these days. Maybe that'll be in a few weeks, because we do have a great group of guests teed up for the next little while. You may recall the last group guy we spoke to was Carlos from Securitize.io. It's going to be similar quality like this all throughout 2025. It's going to be an amazing year, Andrew. I, for one, am incredibly optimistic, excited, a little nervous, because you never know what will happen in this crypto world. But I think we've kind of crossed the Rubicon, so to speak. And these technologies are emerging and hitting prime time at a really interesting moment in business and politics. And I think that it's going to be quite a year. So buckle up. That's it for this week's episode of DeFi Decoded. We'll summarize these predictions in the show notes. Please make sure to like, share, and comment on the pod. It helps other people find it. It helps us with our search rankings. Until next time, that's it. I'm Alex Tapscott. I'll see you later. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.